The US-Iran ceasefire, once seen as a stabilizing breakthrough, is now rapidly falling apart and sending shockwaves across global markets, largely because Israel is not part of the agreement and continues military operations in Lebanon, actions that Iran views as violations even though Israel was never formally bound, creating a dangerous cycle where every strike invites retaliation, already visible in Iran's closure of the Strait of Hormuz and activation of air defenses, threatening a critical choke point that carries nearly 20% of the world's oil supply and instantly triggering spikes in oil prices, stock market volatility, and currency swings, while US officials themselves are signaling deep uncertainty by warning of serious consequences, disputing Iran's version of the deal, and keeping military forces ready to act, which only fuels investor anxiety and capital flight. And at the same time, global powers remain divided, with France and the UN calling for Lebanon to be included, while the US and Israel push back. As humanitarian agencies warn, this could escalate into a broader crisis affecting food security and supply chains, turning a regional conflict into a global economic threat marked by rising inflation, disrupted trade, and pressure on emerging markets. And as a result, markets are reacting fast, oil surging, equities under pressure, especially outside energy, gold climbing as a safe haven, the dollar strengthening, and shipping costs rising. While the real risk isn't just that the ceasefire fails, but how it fails, because any escalation, especially a full shutdown of Hormuz, could ignite a global energy crisis, reignite inflation, and trigger a major market sell-off, making it clear that without a unified agreement, including all key players, especially Israel, this ceasefire is not a solution but a fragile pause, with instability continuing to ripple through oil, inflation, and the entire global financial system.